Hello there, Mavericks. This is Rob Reinhold. This is the Trading Room, and this is election week. It's that week that we've been talking about, and it's also that week we want to be pretty much all done with. So let's hope that the election is done and decided by the end of this week. In this session, we're going to be talking about the news. We're going to take a look at the current state of the market. We're going to score everything from +3 to -3, and then we're going to look in some of those sectors and find some trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, let's jump into the numbers. All right, the equities have pulled back all the way to the 50-day moving average. Now, this comes on the heels of the NASDAQ hitting fresh all-time highs on Tuesday. And if you take a look at last week, and we will take a look at this on the chart, pretty much it was a flat week except for one day. Thursday was an ugly, ugly day and a big sell-off right at the close to take things down. Other than that, it was a flat week. We see the 10-year bond yield keeps creeping higher and higher. That's putting a lot of pressure on utilities, on real estate, and on some of the healthcare sectors. We've been downgrading those sectors for the last couple of weeks, and they all got downgraded a little bit more this week. The US dollar is now having a 5-week rally. I believe the biggest rally it's had in a month since 2021. So look, there's a lot of things that are happening as we're going into this election. And it's all, I believe, putting us in a place where we're going to have a pretty big move one way or the other. I'm expecting there to be a big move this week that lasts for a couple of weeks. We did basically get the end of third quarter earnings. Now look, it's not the end. There's still a couple more companies that are going to report, but we got pretty much all the big players out of the way, and especially this week. This week we had Amazon and Google and Visa have very, very positive news. And then we heard from Microsoft, Meta, and Apple, and they were, again, they weren't negative. They just, they beat their numbers, but then someone wasn't happy with something, and so they all sold down a little bit. In the big names, there was no absolute disasters. There was just some mild profit taking off of, hey, it wasn't good enough. That was it. Let's take a look at the economic calendar because we definitely had a lot last week going on. Let's start off with the jobs numbers. So we had several jobs numbers. The first one I want to talk about is the JOLTS. So we had the JOLTS job openings, and this is something the Fed has been watching. When it was over 10 million, they said that's too high. We want it between 8 and 10. It fell down into that range, and you can see we have now fallen below that range, and there's the least amount of job openings for a while. So we get this report of, okay, weakening employment. Then the next morning we get the ADP payroll number. Now this is the private company ADP that counts payrolls. A huge beat. I mean, look at that beat, 233,000. So all of a sudden it's like, okay, well then employment is still holding on quite well. And then we got the employment report on Friday. That was a very, very bad report. Only 12,000 jobs created. Now, initially, the market kind of freaked out about this, but it recovered very quickly because in this number, there was a lot of disruptions from the hurricanes. So we'll have to see what happens with revisions and how this number is going to get changed for next month or the month after that. But pretty much everyone looked at this number and said, no, this isn't the real number. Unemployment rate stayed the same, and you can see average hourly earnings ticked up a bit. So again, that is an inflationary number. So I want to break this week down in, the first one is jobs. Okay, jobs. Next, let's take a look at things like growth. Okay, so we have home price index up 5.2%. We have consumer confidence. What a great number at 108.7. So consumers feeling really, really good. We had GDP, the third quarter GDP. This is the first number. It came in a little bit under estimates at 3%, but 2.8%. That is a great GDP. When you take a look at the rest of the world that's really struggling to grow right now, U.S. economic growth is by far the best in the world. So this is a really good number, and they actually said that this number would have been 3.0 had it not been for the port strike. So that only lasted a couple days, but again, this is a good number. So we have like this good numbers about growth, and then let's get into inflation. So employment was like kind of a little bit negative. Growth was a little bit positive. And then we get into inflation, and here we have the PCE price index. Came in as expected at 0.3. There were a couple other minor numbers in there that were hotter than expected. And then take a look down here at the ISM manufacturing prices paid. That's a big number, meaning that there's still inflation. So think about this. This is where we are. Employment is a little bit weak. Growth is a little bit strong, and inflation is a little bit high. It is not the best backdrop for a really aggressive Fed. So again, inflation's a little higher than they wanted. It's still well within range. They're still going to give us a rate cut this week, I think. Growth is like hanging on okay, but employment is starting to deteriorate. I think it's a very interesting place to be, and it's not definitive at all. So we're going to have to keep watching these things, and if employment firms back up, that'll be very bullish. If it gets a little weaker, then of course that's going to be a little bit bearish. The markets this week, when we take a look at the numbers, Dow was basically flat. S&P and NASDAQ down 1.5%. It's not a big deal based off of the big rally we've had over the past 2 months. Russell was actually positive, so small caps did a little bit better. This was flip-flopped last week. Oil basically lost what it gained last month. And gold, for the first time in like 6 or 7 weeks, did not make an all-time high again. It just almost made an all-time high and just took a little bit of a breather. That's it. Gold is looking fantastic here at the moment. Let's take a look at the charts. And I really wanted to point out just this week we had Monday, Tuesday, Wednesday. You can see flat. Thursday, big down move. Big down move on Thursday off of, again, some earnings misses, Meta and Microsoft. And then we had this candle here on Friday, which isn't a great candle. Earlier in the day, it looked like, hey, let's recover everything we lost yesterday. By the end of the day, it had sold off. Here we are. We are between the two moving averages. We're above the 50. And again, there is some support right in this area as well. So this is a pretty key level, 5,700 here on the S&P. We're above that at the moment. Going into the election, we're below the 20, and these moving averages have now flattened out. This is a zero. So sometimes there's zeros, meaning it is sideways and not going anywhere. And sometimes it's zeros, meaning, look, when you go from +3 to -3, 0 is along the way. Or when you go from +3 and you have a big pullback down to 0, you could go back up to +3 pretty quickly. So I don't think this is a zero, meaning it's a non-volatile market where it's not going anywhere. I think this is a zero as a stopover to either a +3 or -3. Which one? I don't know. Look, I will give you my opinion of where, again, I'm leaning, but in the end, we don't know at this point. There's really nothing definitive in these charts other than the fact we just made some new all-time highs. So the bias is to the bullish side still, but here we are at the Qs. It's right between the moving averages. That's it. We're between the moving averages. The candle on Friday was not a great candle, a little bit better on the NASDAQ, but the big question is, are we going to break? If we break below these 50-day moving averages, then there's no question that it's going to turn a little bit more bearish. I mean, that's just what the technicals say. If we recover and we have a nice little run this week, guess what? This was just a pullback. This was just a pullback that you were supposed to buy. So the question is, which one is it? I don't know. I don't know at all. But again, I'll give you my 60-40. That's where I am right now. I get 60% leaning one way, 40% the other way. Here's the heat map. It doesn't really tell us anything other than the large cap tech stocks, Microsoft, Apple, Nvidia, all went down, and the large cap communication services and consumer stocks all went up. Google, Amazon. So look, other than that, this is a very, very mixed market. You see just as much green as you do red. As I said, this was mostly a sideways week, other than that Thursday where you had a couple large cap tech stocks bring the market down. So let's talk about this next week. I do think we're poised for a very big move. Typically, you get this big move in elections and you get some volatility around the elections. So let's talk about the elections here, because Monday, Tuesday are likely to be very quiet days. Not a lot of people are going to be sticking their neck out before the election, so I think Monday, Tuesday is quiet. The polls start to close on the East Coast on Tuesday night around 9 p.m. And so we've all been here before. We've seen the elections. They're going to call the easy states right away. But as we get further west and you start to deal with special circumstances, we aren't going to know the winner probably until Thursday night or Friday morning, in my opinion. And let me tell you why. The state of Pennsylvania. The state of Pennsylvania is basically the key to this election for both candidates. Whoever wins Pennsylvania has a much greater chance of winning than the person who did not win Pennsylvania. Here's the problem. There is a law in Pennsylvania, and this is how it was in 2020 as well, was that they are not allowed to count any mail-in ballots until after the polls close. So just think about that. They have probably collected 3 million, 4 million, I don't know how many they've collected. You could probably find that information online. They cannot even open those ballots or start counting them until Tuesday night. Just think about how long it's going to take poll workers to open up envelopes, scan them, do their thing with 3 or 4 million votes. It's going to take a couple days. That's why I don't think you will know who the winner is until we get Pennsylvania. So just expect it. Just go into it knowing that this is the way that Pennsylvania works, and Pennsylvania is very, very key. I don't think we're going to know who won the election until Thursday or Friday. What does that mean to the markets? Uncertainty, volatility. I see Tuesday night, the futures markets. I see Wednesday and Thursday being messy days. And all I mean by messy days is a lot of whipsawing, a lot of, okay, we thought it was going to be one way, now we think it's going to be the other way, where the markets are moving around. I think after there's a winner declared, and I know that is not the end of it, sadly. We found that out in 2020. But look, after that, the market is going to be very happy it's over. I personally believe that the market will go up regardless of who wins. Some sectors will do better than others, but I actually think the very best thing for the market is a decisive victory by one of the candidates, one of the parties. That's what I think is going to be the best. If you are bullish, if you're bullish and you say the best outcome, is it going to be Trump or is it going to be Harris? I don't think it matters. I think what the market wants is to put this uncertainty behind it so we can go back to looking at the economic numbers that right now look pretty decent. That's it. So look, I know we're all invested in politics. I know we all have our sides. That does not matter whatsoever when it comes to your life as a trader. Remember, you have one job as a trader. And I'm going to go to the famous quote of Joe Jensen. I don't care if I'm right. I just want to make money. This is a perfect time to pull that quote out. And look, your job as a trader, just talking about as a trader, is to be on the right side of the market. That's it. Whether Trump wins, whether Harris wins, whether it's a blowout, whether it's close. As a trader, that doesn't matter. None of that matters. All that matters is, did you get on the right side of the move? Period. Now look, outside of trading, do your thing. Do your political thing. Be happy, be sad. Who cares what you do? As a trader, the only job you have is to look at the data, look at the market, look at the movements, and make trades based on what's happening in front of you. So look, I know this is a very volatile time. I know that everyone's got, again, some people are political, some people are not political, some people are stronger than others and have their beliefs politically. I don't care. I need you to trade well. That's it. Who cares who wins the election? I know you care, and outside of your life of trading, fine. But I need all of our traders to just trade well. And if your candidate doesn't win, I don't care for your trading. You just need to trade well. If your candidate wins, I don't care. Just trade well. Remember, your job is just to make money. That's it. All right, my rant is over. Now, after all that is happening, we have a Fed meeting on Thursday. Now, they bumped it back a day. Usually it's Tuesday, Wednesday. Now it's Wednesday, Thursday because of the elections. We have a Fed meeting, and they are expected to cut 25 basis points. And the big question is, are they going to take a look at the recent payrolls data, and are they going to become more aggressive? I don't think they do. I think they're going to look at that report and say, you know what, we need one more data point because of the hurricanes. I think that's what they're going to do. I think they're going to stay. And frankly, I don't think that this Fed meeting is going to move the markets much. I think the election is going to be the big story this week. So I'm not saying you could ignore it, but I'm saying it's probably not going to be that big of a deal. Yes, there are some things on the calendar. And guess what? None of them matter. None of them matter. The election is what matters this week. So where are we on our scores? We're to zero. We're to zero. Now, if you take a look up here, I've got 2 weekly outlooks. I have a 2.5 and I have a negative 1.5. Okay, so this is my opinion here. My opinion is that the market has a greater likelihood of going up after the election than down. I think the market is going to be okay with either candidate winning. Each candidate has their pluses, each one's have their minuses. Yes, there could be some sectors that get hit. If Donald Trump wins the presidency, he has talked about putting tariffs on things. So anything that is going to be hurt by his tariff plan, those stocks could fall down. But the rest of the market is probably counting on lower regulation and lower taxes, which the markets love. So yes, there's going to be some things that are hit. If Harris wins the presidency, those stocks that are worried about tariffs, they're going to give a sigh of relief, and maybe some things like some energy stocks or something don't do as well. Who knows? But look, there's going to be pluses and minuses. But here's the thing is, I think whichever one it is, I think the market is seeing that they're both going to be okay on the economy. Now look, I know that's probably well outside of your political beliefs, and I don't care about your political beliefs. The market is telling us that, you know what, I don't think there's really any big deal. Now look, I could be wrong on this, and we will know by the end of the week if I'm wrong on this, because if one of the candidates wins and the market tanks, it clearly doesn't want that candidate as president, and it's looking at this saying this is a negative for the economy. If that happens, I'll come out and say, oh, look at that. I was wrong. But I think, again, the downside is about a 1.5, negative 1.5. Upside is a plus 2.5, plus 3. I still think there's a bias to the upside. But as always, I will change my mind if the data shows me that I'm on the wrong side. All right, let's go ahead and take a look at sectors. All right, as far as performance goes, we only had 2 sectors positive, and it was communication services, which we were already at a plus 3, and it was finance that we were already at a plus 3. So we had 3 sectors at a plus 3. Sorry, we only had 2 sectors at a plus 3. and they were comm services and financial. So they did great. We had the worst sectors, utilities, real estate. Now, this is directly due to the rising interest rates. Interest rates at 4.4%. All of a sudden, people don't want to buy utilities and real estate for their dividend yield because they can get a better yield in fixed income without the risk. So look, as long as interest rates stay high, I think these sectors are definitely bearish. We also had a -2 on healthcare. It actually held in there pretty good this week, but still went down. And then you can see technology. Technology got hit. So we'll take a look at how much of a downgrade technology got this week. Right, starting off with utilities. Utilities was at +1 last week. We're going down to a -1. And again, this is how it works. It was at a +3, then it was at a +2, then it was at a +1, and now we've swung to negative. So I think you can now be short in the utilities sector. Going on to communication services. We were at a +3, and take a look at that. Breaks out to a new high, has a pullback, and look at this pullback though on Thursday. Remember, Thursday was a real ugly day for all the markets, and look on all these charts after this. Look how bad Thursday was. It wasn't bad at all, and then it just basically hung in there on Friday. So we're at a +3 still on comm services. Here we are, real estate. Real estate went from a 0 to a -2. So you can now be short in the real estate sector. We were already short because it was trending that way. Healthcare went from a -2 to a -3. Now look, there could absolutely be a bounce. It would not surprise me if there's a bounce. But on that bounce, it's a good shorting opportunity. Healthcare is the weakest sector at the moment. All right, let's go over here to industrials. Industrials, one of those that was hanging in, got downgraded to a +2, then it pulled it to a +1, and now it is just a 0. It's sitting there in the middle. There's no call here, but again, remember, there's zeros, meaning, hey, it's a listless market not going anywhere, or it's a stopover to something bigger. And I think that's where we are. I think that industrials is going to be one of the sectors that has a very big move. It's a very cyclical sector, meaning it's very tied to how the economy does. And I think this is going to have a big move this week. So yes, it's a 0 right now. But if I had to lean, I would lean bullish because we did just make a new high. Made a new high, we pull back to the 50. I'm going to be leaning bullish here on this one. All right, financials. Was it a +3, and it did get a downgrade to a +2, even though it was basically flat for the week. We do have to downgrade it because it is now trading at the 20-day moving average. Still a strong sector, still doing well, and we had some good earnings in the sector, but on a chart, downgraded to a +2. Consumer was at a +2 last week, and it remains at a +2. So this is another sector that held in really well. So really well. Thursday, ugly day, but boy, gap up Friday. Couldn't hold the gains, but still closed positive on Friday. This is a good sector, at least, again, it's holding in at the moment. Did tech hold in? Not really. Not really. So it was holding up here, trying to hold on to this 20-day moving average. And you can see that Thursday candle was a nasty, ugly candle. We bounced back a bit, but we are just at a 0. This is another sector like industrials. I expect to have a big move this week based on the outcome of the election, based on how they think they're going to, what the candidate or the winner is going to do for the tech sector. Likely being a big move, and again, 60-40 leaning to the bullish side. Materials was a sector that we took to a 0 last week. Sorry, we took to a -1 last week, and you can see it has weakened more here. So we're now trading below moving averages. We're at a -2 on materials. It's not a very steep -2, but it's still trending downward. And here's energy. Take a look at just these candles. These candles are really tight and really crazy. I mean, yes, we have a few expanded range candles, but you can see these two, basically it was flat after day 2. I mean, basically nothing happened. So very, very tight ranges. This is the only sector I truly believe is a 0, meaning it's listless. It's not going anywhere. It's likely stuck. Everything else that's a 0 at the moment, I think is Sorry, it's a -1, but it's not going anywhere. All right, let's see the changes this week. The biggest drops were from the interest rate sensitive sectors. Real estate, utilities, healthcare, all down. So again, I think those are all shortable sectors. Materials and energy weakened a little bit, not too much. And then what happened up here with the strong sectors? Well, industrial and technology went to a 0, no longer strong. And we are left with financials, consumer, comm services as our strength. So as you can see here, we basically have 3 stocks that are showing relative strength. Sorry, not stocks, 3 sectors. 3 sectors that are showing relative weakness. So these are really clear to me. This is where you want to be long, this is where you want to be short. Really clear. I'm going to put utilities and say you want to be short this as well. But industrials, technology, I think these are the ones that are the wild cards. I think they are at 0, but it's not going to be there for long. I see these being +2, -2 by the end of the week. I think there's going to be a big move. Which way? Again, I'm leaning 60-40 to the bull side. But look, why wouldn't you just pick these? Just pick these. If you say I want to make a bullish trade, it's too hard to figure out if industrials and tech are going to recover. Why don't you just make trades in financials, consumer, and comm services? All right, so talking about trades, we've been dialing back our trades. And I talked about this last week, and we're going to talk about this again this week. I said, look, it's very prudent for us to dial back our exposure going into this election. We have definitely dialed it down. We have 2 trades rolling off. We took 3 new trades last week. We only have 5 trades on at the moment. So look, we're going to add a few more, but that's it. We're going to get adding more after the election, after there's a better indication of where the trend is. But until now, we got a market score of 0. Market score of 0 tells us this is our allocation. This is our allocation. 2, 3, 5, 3, and 2. That's where we should be. Right now, we have a -2. We have a -1. We have a +1, a +2. And we do have 1 +3 in T-Mobile in comm services. That's still looking okay. It's not great, but it's still definitely looking like it could move in our favor. Other than that, I'm going to be very selective on what I add, and I'm just going to be adding a few. And as you can see here, they're wimpy. I got a -1 in utilities. I got a +1 in industrials. Now, why did I go to a +1 in industrials? Well, I already have a trade in consumer. I already have a trade in financial, and I already have a trade in comm services. So I took this sector I thought at 0 was going to be likely the best performer, and I'm going to go with industrials. And then energy. Energy, I believe, is the only true 0 out there. The only sector that's likely to be a 0 next week and the week after. I do not think that technology or industrials are going to be 0s. So let's take a look at a couple possible trades just in those sectors. And like I said, we're gonna dial up the trading after the election, but right now we're just going to coast into it. All right, in the utility sector, looking for something negative, looking for something bearish. So this is AEP, and it's got a nice descending triangle pattern here. So if you take a look here, we got descending highs, and we've got some support down here at 97. Eventually, these descending triangles, they do break lower, and that is what the trade is going to be. We're going to be taking a look at the November 15th, 195 bear put spread. So if you take a look at where that's going to be, right here, the stock is basically right in the middle of the spread. So 95 to 100, which is right in the middle of the spread, meaning that you'll probably pay about $250 for this spread, have $250 of risk, $250 of upside. This is a 50-50, 1-to-1 reward to risk trade. Our negative ones, we usually like to do that with some positive theta. This one is not going to have positive theta, and the reason why we couldn't get that was that there are only $5 strikes on this stock. So it's not possible for us to go get the delta we want because the strikes are not available. But that's fine. That's fine. So this is going to be a negative probably 1.5, not a true -1 here. But I don't see any reason why this thing doesn't break down if the rest of the sector continues to break down as well. Moving into industrials, I want to be a +1 in industrials. So here is Rocket Lab. So Rocket Lab's looking really good. Now look, this thing has come from about $3 or $4. And I know people are going to look at this and say, Rob, it's already up 300%. Yeah, that's how things work. And you've all seen stocks before they're up 300%. And look, yes, some of them don't go up anymore, but a lot of them go up even more than this. And look, we're only looking to be in this thing for 2 weeks. Beautiful high base here. Big question is, where is the target on the breakout? I connect these two lines, $13.50, maybe all the way up to $14 for a target. So let's use that. Now I'm going to be doing a +1. I'm not looking to be super bullish here. I'm looking to do a +1. So I'm going to look for a positive theta trade. Sorry, that should be 11.50. So I'm looking at the October 8th, 11.50. If you want to be a little bit more bullish, do the 11.12.50. That's going to be more of a +2. But take a look at this trade. This is the wimpiest trade you could possibly make, 11.50. If it is above 11.50 by Friday, it's a max gain. If it's below 11, it's max loss. Anywhere in between, it's, in between. Max gain and max loss. That's Rocket Lab. Just a 1 week trade on that. And let's talk about energy. Energy, I think, is sideways. So I'm looking for just something sideways, and look at this. This is the poster child for sideways. Flip-flopping, moving averages. They just keep flip-flopping all over themselves. And we got this range from 35 to 40. So 35 to 40 is the range. So we're going to use that range and put a butterfly on this. The November 15th, 35, 37.50, 40 butterfly. And the profit area is probably going to be right around 39 to about 36. Again, it needs to be in this range for 2 weeks out to the November 15th expiration. So look, if this thing has a big breakout or breakdown, yeah, it's not going to work. But it's not telling us that it's going to make a move anywhere. All right, let's wrap this up. Expect a large break this week. Which way? Nobody knows. Anyone who says they know is lying to you. I'm 60-40. I'm 60-40 bullish, 40% bearish. I think the biggest risk is that we don't know the election results by the end of the week. I think the market is not going to like that. I think the market is going to dislike that, and I think you could see some downside on that. I believe if it's a definitive victory for one candidate or the other, I think the market is okay with either. I think the market's going to be happy with both, and we'll probably see a large move higher. And again, large move 2-3%. And we're not talking about anything crazy. But then that's going to set the tone for the rest of the year. We'll have to, of course, see when we get into December. But I think for the next couple of weeks, that break is going to have some legs to it. If we do break down, I think that breakdown has some legs to it over the next 2 to 3 weeks. So whichever way happens, I think it has some follow through for a couple of weeks. So I think we need to wait. Again, we don't have a lot of trades on now. So when we get that break, then I think it's good to add on trades once you see the direction it takes. I'm not looking to place any trades on Monday and Tuesday or even Wednesday. I'm really only looking to place trades on Thursday, Friday, when I have a better idea of the outcome of the election. All right, that is the Trading Room. Take care, everyone. Goodbye.